Hey there, YouTube. Myron Golden here, and I am here with one of our VIP Day students, Mr. Carter Cofield, one of the greatest tax strategists in America, and a brother who is BAD to the BONE. In fact, this guy saved me in December of last year over $320,000 in taxes for the month. My man, Carter Cofield, welcome to the show.
I'm blessed to be here, man. So happy.
Yeah, man. You first of all, I asked you this morning, how old are you?
I'm 31.
31.
31. Yep.
You way too young to be this smart, bro. Way too young.
Well, so here's actually a funny story. I actually got blessed with a head start on life. So my mom unfortunately passed at 14.
I'm sorry to hear that.
And my dad passed at 16. So.
Wow, you were 14 and 16 and lost, by the time you were 16, lost both parents.
Lost both parents.
I can't even wrap my mind around it, bro.
And at that moment, it was a tragedy for me because I'm like, why me? 16-year-old kid, South Side of Chicago, no direction.
Wow.
Right?
South Side.
South Side of Chicago.
South Side.
South Side.
I am familiar with South Side. I used to live in Gary, so I'm familiar with South Side.
Yeah. South Side of Chicago, no direction. And it really almost disabled me. You know what I'm saying? Almost paralyzed me.
It was traumatizing.
It was traumatizing. But the moment I changed the story and said, God didn't take my parents away. He made me grow up at 16 years old. Most people don't grow up till they're 21.
And he gave you the opportunity.
He gave me the opportunity to have a 5-year head start on most people. I'm a 10-year head start on most people. So I grew up at 16 years old, and that allowed me to really just go all in on my education. I go all in on like my future and just get really, really determined because I had no plan B. So I had to put all my eggs.
Ain't it funny how when you don't have a plan B, plan A is a jam. Plan A is the whole deal.
Exactly. So that tragedy that I thought was, was a tragedy as a kid, it ended up being a blessing in disguise because, at 16 I had to grow up, and that allowed me to really just get really.
You had to get focused.
Super focused on my future. So we say 31. I feel old, but it's because I've been.
Yeah, because you're an old soul.
Yeah,
because you've been through a lot you went through a lot at an early age.
Absolutely.
It's fascinating how, at 31, you're mature enough to know that the worst things that ever happened to us in our lives are the best things that ever happened to us in our lives, and you got that figured out at 31. That's pretty stinking awesome.
Yeah. So now when I go through a tragedy, it's like, what do I have to learn? How is this going to mold me to become the person I need to be to go through the new doors that God has to open for me?
So good, bro. So tell everybody what you do, how you do it, why you do it, how you got started.
Yeah.
All that right there.
Got you. So my name is Carter Cofield. I'm a CPA, and I'm a tax strategist. It's a difference between a tax strategist and a tax preparer.
Okay.
The tax preparer just takes your papers, files it for you, then tells how much you owe the government, right? Which is a lot of times bad news for most people.
Woo!
Right?
Come on, get a witness.
You know that all too well, right? I'm a tax strategist, so I work with people throughout the year to help them keep all the money that they make. So now we file taxes, not only do we not have a large tax bill, we might not owe anything because we've been strategically aligning ourselves throughout the year to make sure we don't just make the money, but that we keep the money as well. So I help entrepreneurs live tax-free, and I've been doing it for over 10 years. And like you said, we had a conversation in December for about 30 minutes, and we had $300,000 plus of tax savings because as entrepreneurs, we work so hard for our money.
Oh, bro.
We left the security of an employer.
Come on now.
To start something that might not work.
Right.
And they got the nerve
and then they
to
come
say,
and hit us in the head.
Let me get 50% of all that stuff you just earned.
Yeah.
You just worked so hard for.
Plus,
if
you have employees.
Oh, yeah.
You're a forced unpaid tax collector for the government. So you're literally a tax slave because you are forced to collect taxes from your employees and remit it to the government, and they don't even compensate you for it.
I'll break it down to people like this. The average person pays 51% in taxes. Because most people are like, I'll just pay federal tax. No. You can pay federal tax, you can pay state tax, you can pay FICA tax, you can pay
county
property
tax, school tax, property tax.
And then you die, what they want?
Death tax and state tax.
So the average person pays 51% of their lifetime income in taxes. So essentially, the way I tell my students is, that's like you work in the first 6 months of the year for free.
For free.
That's too much.
That's too much.
That
ain't too much. That's way too much.
We're not doing that. So my goal is to help people keep all the money that they earn throughout the year through tax strategies. Because most people are scared of the tax code. Most people are scared of the IRS because they think that the tax code is a rule book for them to pay as much taxes as possible. When in reality, all the tax code is an incentive system created by our government. And we know our government's lazy, right? So, really lazy.
That's one adjective. There's a whole bunch of other ones to go with it, but go ahead.
So they created this rule book to say, hey, if you do what we want you to do, we'll give you some tax breaks. But if you do a lot of the things we want you to do, we'll give you a lot of tax breaks. Better yet, if you do everything that we want you to do, we'll let you live tax-free. But most people don't know the rules of the game, so they can't win the game.
Well,
You know what I'm saying?
you can't win it if you don't know the rules.
Yeah, we would never.
You're going to get disqualified
Right,
in the middle.
You wouldn't go on a basketball court try to throw a football in the net. So why do we approach the game?
Or hit a football with a baseball bat on a basketball court.
Exactly.
Right.
So we wouldn't do that. We wouldn't play any game without first understanding the rules. So why do we enter the game of business? Why do we enter the game of money? Why do we enter the game of taxes every single day without knowing the rules of how to win the game of taxes?
Come on, Harry.
But that's going to change today.
So I heard somebody say, you can tell me this is true because you're the tax expert. Like, and I always tell people, if you think it's hard to make $1 million or $10 million, try accounting for it. Can I get a witness?
Absolutely.
Okay. So I tell people, look, here's the deal. If all you have is a job, you pay taxes first and get to live on what's left over. But if you own a business, you use your money first and pay taxes on what's left over. Am I close to being right?
That is 100% correct. Like, that's one of the most powerful lessons that I have to teach people for them to understand how important the game is. Because as W-2 employees, you work hard for your money, 40 hours, 50 hours, 60 hours a week.
And you pay
And then they
the
come
government
take first.
before you get your check.
Before you can see your check,
Right.
you gotta pay the IRS, federal tax, state tax, FICA taxes. But as business owners, as entrepreneurs,
Well, in Florida, we don't have state taxes.
yeah, there you go. There you go.
but
So you say you're beating one system.
I'm beating one, yeah, but the other one's beating you.
But as business owners, the reason why it's so unique for us is because we make money. And then we get to spend money on tax-deductible expenses like our cars, our travel, our rent, our meals, our clothes. We get to spend all this money on tax-deductible items, and then we pay the IRS what's left. But let me let you in a little secret. If you got a good tax strategist, ain't gonna be nothing left to pay him. So I just encourage
You're
you.
gonna buy stuff that you and your business use, that you and your business benefit from, and then when you buy those things, you don't pay taxes on that money. That's the meaning of a deduction.
Absolutely.
Okay.
Absolutely.
Let's go.
So now we just have to understand, all right, Carter, what are these deductions? Like, what is tax deductible? And this is where the fun happens, right? Because the IRS says in code 162A,
He knows where it's at.
Oh, I gotta let people know. I ain't just.
He said in 162. So if y'all wasn't paying attention, write that down. 162A.
It says for business owners, any expense
Uh-huh.
that you deem ordinary or necessary to operate your business is a
Ordinary,
tax deductible expense. And the beauty of that is we get to decide what we deem as ordinary and necessary for our business. So any expense that you can prove.
So this LED wall, ordinary and necessary.
Absolutely. You have a phenomenal YouTube channel. You have a phenomenal podcast. So this is a beneficial background to help your business attain and make more money. So this is 100% tax deductible.
Buy whiteboard over there.
100% tax deductible. It's ordinary and necessary for you to teach the strategies that you teach, and therefore you get a tax deduction for
Since
it.
I got an LED wall up there, I can't deduct the one back there.
Oh, all that.
That one too.
That part.
Oh, okay. I'm just checking. I want to make sure we're having the same conversation.
Exactly. So
Right.
it gets fun. Like once we start understanding, there are a list of over 400 different tax deductions that we get as business owners.
How many?
400 plus.
Tax deductions.
Exactly. And 90% of business owners are missing out on them
On 390 something of them.
because we understand that information changes situations. And we also understand what we don't know is costing us a fortune. So it's our job to learn more. We can talk about that in a second. It's our job to learn more so that we can earn more. One of the best things you ever told me, and I don't know if you remember telling me this, is that learning should be like earning. It should happen every single day.
Boom.
And if you're not earning every single day, it's probably because you're not learning every single day.
Oh, snap. Let's go. I don't remember saying that, but I'm glad I did. I'm so glad you reminded me because I'm gonna say it again to somebody else.
So it's just so important that we understand the rules of taxes. And for the W-2 people out there, I want you to understand that you can win the game too. So we can get to some strategies of business owners, but I want to quickly get the strategies of W-2. There's some W-2 people out at home that are listening. It was like, all right, Carter, I hear what you're saying, but I still work a job. What can I do to benefit on taxes?
Okay.
And one of the best things that a W-2 earner can do is turn their hobby into a side hustle.
Turn their hobby into a side hustle.
Turn their hobby into a side hustle.
Which is basically a business that has tax deduction.
Exactly. So if you're a W-2 earner and your hobby is to travel, I will encourage you to start a travel vlog. Right? So now every trip that you take to another state, another country, that's an ordinary and necessary business trip. Because how are you going to write a blog about traveling without traveling? So now you get to write off these trips that you're going to take, these personal trips. These are now business trips. Oh wait, but you use your cell phone to record your content. So now your cell phone is ordinary and necessary. So now you're able to write off a portion of your cell phone bill. Right? And then any meals that you have while you're overseas or wherever you're at, as long as they're business meals and you talk business, we just came from lunch and we were talking business, right? So now you get to write off 50% of those meals. So now your hobby that you were not getting any deductions for, you might have $5,000, $10,000, $15,000 of tax deductions in this side business, which is your hobby. So now you got these $15,000 in losses. Most people don't know that you can take those losses and subtract it against the W-2 income you make at work.
So now the taxable income that you have is lower.
And when your taxable income drops, your tax bracket drops.
drops.
So now,
you're paying a lower percentage on less money because you turned your hobby into a side hustle.
So that's how
I hope y'all paying attention.
Hope they're picking up what I'm putting down.
Huh?
Because now the same person that has a W-2 job that wasn't, saving any taxes, now they might get a $10,000, $15,000 refund, because you remember as a W-2 earner,
they're taking the money out first, so you're automatically, if you start doing that, overpaying in taxes, so you can get a big old ginormous refund that you can use to do something else in your business, which also you can write off.
Yeah, you can use that. You can use that money to then fire your boss and then start your own business. Because now you got seed capital to start your business, or you can use that money to invest in real estate that has depreciation. It gets deep. It gets deep. So that's the way that W-2 earners can win the tax game as well.
Dude, you just made me dizzy. Like y'all, if y'all watching this standing up, sit down. I don't want you to fall and hit your head. Right?
We're just getting started, so just take a seat. Take a seat.
Yeah. That is amazing, bro. So how did you get into taxes and being a CPA? Like, 16-year-olds was like, you know what I think I want to do? I think I want to be a CPA. Or did you say that when you were 16?
So it's actually a funny story. So I graduated high school during the 08 recession.
Okay.
So
wow, you just hit me in the head again.
Yeah, I'm sorry. The recession that people decided to participate in.
Yeah, but you graduated from high school in 08. Like, what was I, 48, 58 in 08? But anyway, go ahead.
Yeah, so I graduated high school around the recession, and remember, I have no parents. So my auntie is stabilizing her kids and me and my sister. So I literally, I knew I was good with numbers, so I Googled what job has the lowest unemployment rate, because all I saw around me were people who were unemployed.
You Googled what job has the lowest unemployment rate. At how old?
About 17 years old. I told you I had to grow up fast, man. There was no time for ambitions and dreams. What is your
17-year-old Googling? That's the craziest thing I've ever heard. I promise you, I wasn't Googling what job has the lowest. Of course, there was no Google when I was 17. But were there a Google when I was 17? I wasn't looking it up in the encyclopedia. Right. What job has the lowest unemployment rate when I was 17? I promise you I wasn't looking that up.
Yeah, and because I couldn't afford to be unemployed, I had no plan B. So if this employment didn't work out, I had to make sure, like, whatever field I go in, I had to have stable income.
Did you have a job when you were 17 when you were Googling that?
Yeah, absolutely.
So what was your job? What were you doing?
I was working at a suit company, a company that were giving prom suits.
Formals?
Yeah,
formal attire?
Yeah, exactly.
Rented formal attire?
Yeah, nothing, just to get by.
In Chicago?
Yeah, in Chicago, yeah.
Wow.
So I'm Googling what job has the lowest unemployment rate. CPA is number one. Because no matter what happens with the economy, no matter what happens, everybody needs their taxes done. So I'm like, that's what I'm going to school for. So I got a full scholarship to the University of Illinois, which has a top 3 accounting programs in the world. Got my undergrad degree, got my master's degree.
In accounting.
In accounting.
So you're a bad man when it comes to accounting.
I don't play. I'm top 2 and I'm not 2. I'm top 2 and I'm
You're
not
in the
2.
top 2 and you ain't number 2.
There you go.
Oh, okay.
So,
All right.
So
I heard you before you drove up. He's in the top 2 and he ain't number 2.
yeah.
Okay, got it.
But then so I started working at a Big 4 accounting firm, and I'm working.
A big 4. What does that mean?
That means that one of the top 4 accounting firms in the world.
That's what I thought you meant, but I just
Okay.
wanted to make sure they knew what you meant when you said that.
Absolutely.
Okay.
And so I worked for this company, and it was good. It was nice, but I'm learning about the tax code while I'm at work. Because just because you're a CPA does not mean you understand tax law. Because with CPA, you need to know audit, you need to know regs. So I was studying like the taxes, and I remember reading that code section 162A that said, if you have a business or a side business, you can write off any expenses ordinary or necessary. So here I am with this job learning about tax deductions while I'm not taking advantage of them.
And that's what hit you in the head when you was reading that.
That's-
You read 162A and you said, wait a minute, I can't take that as a deduction.
I can't take none of this. So I had to make a decision.
And you knew how much they were taking out of your check because you saw your check every week.
Every week taking, I think I was making $100,000. I was bringing home like 69, so $32,000 of taxes every year. But I'm learning the rules on how to not allow this to happen.
So you're getting paid to learn the game.
And now
So your job wasn't just about making money. You was getting paid to learn the game.
and now I get paid to teach the game.
Oh, I saw what you did right there. I saw what you did right there.
But what's interesting to me, Myron, and I know that we can really agree on this, is that the educational system, our school system,
Oh, what I call the miseducational, misdirectional system, AKA government indoctrination camps, child prisons, or schools, or whatever you want to call them, those? Okay.
They could have easily taught us this in 8th grade.
Right.
They could have taught us, hey, if you,
But they really couldn't. You know why they couldn't, don't you?
Why?
They were too busy teaching us stuff we'd never use. But anyway, go ahead.
exactly. Well, they purposely didn't teach us this because if they taught us that becoming an entrepreneur or becoming an investor is how you make money but avoid paying the government taxes.
Right.
The government pays for the schools.
Right. Then
So why would they teach? They have a direct line of incentive not to teach us
you.
this, right? So my biggest epiphany was, look, okay, let's think about this. We were taught to go to school, pay $100,000 for college, to go learn from somebody who was not doing what I want to do, nor who was being who I want to be,
and certainly wasn't making you what you want to make.
and wasn't making what I want to make. And guess what? On top of all that, I can't write that off on my taxes. You can write off a little bit of tuition, but as soon as you make a little bit more money, they take that away. And you can write off a little bit of your student loan interest, but that's $1,500 a year. So basically, you want me to pay $100,000 to learn from somebody who's not doing what I want to do, or being who I want to be, or making what I want to make, and I can't write that off on my taxes. But on the other hand, I can go learn from somebody who's doing what I want to do, making what I want to make, like a Myron Golden. I can go learn from somebody who's doing what I want to do, like a Tony Robbins. I can go learn from these multimillionaires and billionaires, and all the money that I pay them for coaching is
a tax
100% tax deductible.
So this you just made me have a thought I've never had before.
Really?
Yeah. So you're telling me and the people who are watching this video right now, from a tax perspective, hiring a business coach who is winning at the game you want to win at is by far more strategic and advantageous for you than spending money on college tuition, which is not tax deductible.
1,000%.
1,000%.
It was the biggest epiphany I had like last year, the year before. I'm like, wait, don't tell me it's true about what you say. Show me it's true about what you do. So the government says go to college, but you're giving me a tax deduction. You're incentivizing me not to do that, to go pay a coach instead. So I can pay a coach who literally can distill the information, give it to me faster, that has the receipts.
But seriously, that coaching stuff doesn't really work, does it?
So can I?
That don't really work. Like that, all those coaches out there.
All those scams?
That's got to be. That can't be real.
Okay, so.
They're just getting paid to teach people something they learned in a book or something like that.
All that. So is it okay if I tell your audience how your VIP day made me 7 figures. It helped me save 6 figures in taxes at the same time, and I didn't pay for it.
Your My VIP Day. By the way, my VIP Day is $350,000 because I get paid $40,000 an hour. Now, I know to some of y'all that sounds crazy, which means that program is not for you, at least not now. But there are some of you out there who are stuck at $50,000 a month or $100,000 a month in revenue in your business, and even though you're making what most people would consider a lot of money, you're smart enough to understand that you're still stuck, right? And so for those people, $40,000 an hour or $350,000 for a VIP day that's going to help them do what did you say you did?
Made 7 figures.
You made 7 figures.
And saved 6 figures in taxes.
Saved 6 figures in taxes.
And I didn't pay for it.
And you didn't pay for it. Okay, now you got to talk to me.
Okay.
Because I got paid. Somebody paid me. I don't know. Somebody paid me.
Gotcha. You got paid.
I got paid.
Okay, so last year in December, I was really contemplating the VIP day because I thought it was crazy too. I'm like, pay him what, when, and who? Okay.
What?
Okay.
He don't know me like that, and I sure don't know him like that. Oh, shucks.
But I'm at home internalizing it. I'm like, okay, well, it's not can I afford it, right? It's how can I afford it, right?
Sure.
So I had $350,000 in available credit. So I had 2 lines of credit, $200,000 each from 2 different banks. So I had a $400,000 line of credit. And I'm like, okay, well, I can use the line of credit to pay for the VIP day because loans to the IRS are not taxable.
Okay.
So I got this $350,000 line of credit, and I paid you in December.
Right.
My VIP day wasn't until the next month, but I paid you in December strategically because when you, yeah, you know.
It's the end of the year. Let's go.
So I used other people's money to pay you, which got me a $350,000 tax deduction in December of last year. Even though the service wasn't being rendered until January next year.
You paid for it.
I paid for it in December, so I got a $350,000 tax deduction. At my tax bracket, that saved me over $150,000 in taxes, right? So I used other people's money to save $150,000 in taxes. And then when I got the information from you, I was able to do $1 million in a day.
In revenue.
In
for
revenue.
your business.
For my business. Which I then used the revenue from
my business
to pay off the loan. So I got a $350,000 tax deduction, which saved me $150,000 dollar for dollar in taxes. Didn't use any of my money, but then used the money that I received from the coaching to pay off the loan.
And still had
900
and who knows what thousand left over.
Exactly.
That's cray.
So when we think about coaching and investing in ourselves, the government is incentivizing us to invest in ourselves.
Well, and when you think about it too, it's like if somebody knows how to do. Here's one thing I noticed. So I'm a golfer. Mm-hmm. You're not a golfer, right?
No, not yet.
Not yet. Cool. So I noticed. First of all, golf is the hardest sport there is. I'm a black belt in martial arts. I've literally broken 5 concrete slabs on fire with my bare hands. Golf is harder. Okay, so now I wanted to put it in perspective, right? So golf is hard. Golf is so hard, but you watch the pros play golf and they make it look so easy and effortless. Why? Because people who know how to do something at a professional level, they know how it works. I heard somebody say, amateurs practice until they get it right. Professionals practice until they can't get it wrong. And so there are people out there who play at what you're struggling with and can show you how to play at it too. But they're usually going to charge you a decent amount of money for that, right? So if you pay that, it gives you a shortcut. So the money you paid me, I mean, it was nice. You paid me hundreds of thousands of dollars, but you made more off of that deal than I did.
Absolutely.
And so that's the thing that people miss. Like I paid hundreds of thousands of dollars for coaching, and I've made millions in return, right? Because the difference between, here's what people don't get. Here's what y'all need to understand. The difference between where you are right now and where you like to be is exactly the same as the difference between what you know and what you have not learned and implemented yet.
Absolutely.
Real talk?
Real talk. And one of my favorite quotes to tell people is that you cannot lead where you did not go, and you cannot teach what you do not know. So like it's almost impossible if you try to get there yourself. You can take the slow boat to China if you want to.
Come on now.
Or you take the fast track. I don't want to get rich slow. I don't have time for that.
Come on now.
You know, because you say all the time.
Yeah, you already have my age. You in a hurry.
Oh man, yeah. So I am, and I just think that if more people knew that, and if more people knew the government will reward them for doing that, then I think more people would take advantage.
So you're incentivized because you're going to make more money.
Mm-hmm.
You're incentivized because you're going to pay less in taxes. Like, what's the problem?
I don't know.
This part you're having a hard time with the math and the logic, right? Because they both of them are there, right?
Yeah. And I think that once people learn more, once people start to understand that this is what they should be doing, and when they understand the tax system, like one of my favorite tax plays, and I don't think you realize how well you're doing this, but you're doing it so well.
Okay.
Okay.
Do tell.
So
I'm already doing it.
Yeah, you're already doing it.
I'm already doing it, y'all.
You're already doing it.
I don't even know I'm doing it. I'm doing it.
So, when you, as a business owner, you can have what's called a board of advisors.
Okay.
Just like a corporation has a board of directors, you have a board of advisors. This can be your family, your friends, whoever you want it to be. You employ a lot of your family members, right? A lot, you know. So due to that, when you employ your family, whether you pay them on payroll or put them on your board of advisors, you're now allowed to have board of advisor meetings every quarter. And these board of advisor meetings can be anywhere in the world. And if your board of advisor meetings are your family, that means that the Thanksgiving trip that y'all take to Cabo, that's not a Thanksgiving trip.
That's a board of advisors.
That's a board of advisor meeting, which is now 100% deductible. So now you can write off all the flights that you pay for, you can write off the Airbnb costs that you rented out, and you can write off all the meals that you all get catered to the house, because it's now your board of advisor meeting.
Like the board of advisor meeting that my wife and my daughter and my son-in-law and my granddaughter had recently in Arizona, like that board of advisor meeting.
That board of advisor meeting.
Okay, yeah, got it.
You know, so now we're getting to spend time with our family, we're getting to spend time with our friends, we're getting to mastermind with them and help them understand business structure, business tactics, and we're getting a write-off for this amazing experience that we're having with our family. And we can do this every single quarter.
That's cray-cray.
Crazy.
Baby Ray Ray and Nene cray cray. That's cray-cray, bro.
Yes. And it's so powerful because I think what's lacking, in the Black and brown community is just it's entrepreneurship and understanding. Like we don't speak about money at the dinner table. We don't speak about business at the dinner table because we don't know that there's a tax incentive to do so. So every time I sit with my family or sit with my sister, we're talking business.
Wow, we're talking about money.
We're talking about money.
It's so fascinating because I'm gonna tell you something. So you know that I have a very diverse and multicultural audience.
Absolutely.
And networking group and student base, right? It ain't just Black and brown people who don't know. I promise you, it's people that don't know. You know why they don't know? Because almost everything we learned about money when we were growing up is a lie. Got to work hard for your money. 8 hours work for 8 hours pay. Only two things in life guaranteed: death and taxes. Everything else is negotiable. Like, we learn all this stuff that's just words that made somebody else feel smart, but at the end of the day didn't do us any good. Can I get a witness?
Yes, absolutely. But at the same token, it's our job to get to learn, right? Nobody's gonna come save us and give us the information. Yeah. It's our job to take it upon ourselves to learn.
Like, they got free books at the library, but the library don't bring them to your house and read them to you. Right? She ain't go, it's the librarian again. She came by. No. That ain't the librarian's job. She don't read to you.
Absolutely,
right.
Absolutely. And one thing that one of my favorite strategies I learned this year, and I really want to bring it to you while we're here.
Yeah, bring it to me while we're here. I might like it too.
Yeah, you might like it. So you love golf.
I do.
Right?
I do.
So have you heard of the Augusta rule?
I have.
You have?
I have.
Okay.
Yeah, I have heard of it.
Okay.
What is it? 14 days per year that you can charge for a rental property.
Absolutely.
Maximum rate. Blah, blah, blah. And the entire time it's tax-free. But I don't know how much money, but I've heard of it. I don't know the details.
Okay.
So why don't, for those who haven't heard of it and don't know the details, I'll let the CPA explain it.
But
I understand.
You had the foundation, though. You had the foundation. So the Augusta rule came from the Augusta
the Masters
golf tournament that used to be in Augusta, Georgia, and the people that lived there would rent out their houses to the people that came in town. They didn't know they had to pay taxes on this money, so when tax time came, they're like, yo, why we got to pay taxes on this money that we made from rental income when we only rented out our house a couple of days a year? So the IRS came back and they changed the rule and said, okay, we're going to implement this new rule called the Augusta rule that states if you rent out your primary residence for 14 days or less per year, you don't have to recognize that income on your tax return.
Right.
Right?
How much can you rent for?
We'll talk about that in a second. We'll talk
Okay.
about, yeah, okay, talk about that in a second.
Okay.
So when this rule came out,
I'm sorry, I pulled up
no,
so fast.
I say, whoa,
I'm
wait,
trying to get
I'm
to
like,
the destination. You're like, no, we on our way, but we ain't there yet.
we gonna marinate this information.
Like when you're traveling on vacation with your kids. Are we there yet? We ain't there yet. We ain't there yet. Okay.
We gonna get there though. I promise.
We gonna get there.
We'll
Okay.
get there. So, so you get to rent out your primary residence for 14 days a year or less. Business owners got smart. It was like, wait, okay, we understand that we can rent out our primary residence to strangers, for 14 days a year, but can we also rent out our primary residence to our business
for 14 days a year?
Right. So now you, the residence owner, can rent out your primary home to your business for content creation, for strategy sessions, for whatever, for 14 days per year. And how you think of the rates is, all right, you look at you go to Airbnb or VRBO, and you say, all right, what are the comparable rent rates in my area? So
And you can do it like during spring break or whatever, the peak season.
That was my exact point. It might only be $500 a day normally, but if you rent it out during spring break, it might go up to $1,000 a day. So I had one of my students, this was one of the plays of all plays. He already had a really nice house. He's making good money, like a multi-millionaire, right? And we wanted to leverage the Augusta rule. He lived in Phoenix, Arizona. So this year, guess where the Super Bowl was?
Phoenix, Arizona.
So we decided to leverage the Augusta rule while the Super Bowl was in town, those 2 weeks. His average rent rates went from $1,000 a night to $3,000 a night.
For 14 days.
For 14 days, which means 14 times 3 is
32,000.
32,000? Okay, yeah. It's more than that, right? 14?
52,000.
Okay, yeah, 52. Yeah,
52,000.
52,000. So he gets $52,000 of income
that he can take off
that
his
he
tax.
does not pay taxes on. And his business gets a $52,000 tax deduction.
Because they paid to use that property in those 14 days.
Exactly. So his business gets
So you literally saved $52,000. He really literally saved $52,000 if he's at a 50% tax bracket on his business and his life. Boom.
That part.
He saved 50% personally and 50% as business.
Absolutely. And got to just host masterminds at his house with his friends and shoot content.
Crazy.
I'm telling, like, if you want to pay less tax, simply change the facts. But in order to change the facts, you got to know the rules to change the facts, right? But if you want to pay less tax, simply change the facts. But we don't know the facts if we don't learn the rules.
So y'all saw what he did. If you want to change the tax, you got to know the facts. I'm gonna say this: if you a poet and you know it, you better let it show it. Come on now. Come on now.
I love it. So these are the strategies that I just encourage people to learn, because like, when you,
that's crazy.
Yeah. It's so powerful to know not just how to make the bag, but how to keep the bag. Because like, what I tell people all the time, it's not about how much
That's
money.
literally $52,000 extra in his pocket. 52,000. What can you could do some stuff with 52,000.
Do a whole lot. You can do a
52,000?
Absolutely. And that's just one of the plays that we can leverage as a business owner. There's so many different plays and different strategies that we can leverage as business owners to legally and ethically keep all the money that we make in our business. And like, the IRS is okay with it because.
So let me ask you a question. You say all. So I'm gonna play like
Devil's advocate?
I'm never gonna be the devil's advocate because I don't like him that much. Okay. So I'm gonna look at the law of polarity. You say all. At what point, at what amount of money does it go from all to most or some? Because there has to be some point where it's like, I mean, unless you're building rocket ships in the backyard or something.
No. Grant Cardone paid no income tax the last 2 years. He's a billionaire. He bought a jet for $150 million. He didn't pay $150 million, but he bought a jet for $150 million. He gets to depreciate. He gets to write off that jet 100% in the year that he purchased it.
So he saved $150 million in taxes.
But guess what? If his business only made $75 million that first year, because he doesn't make all his money in ordinary income, he makes a lot of his money in passive income, then the next year the
75
75 million rolls over. So there's no a dollar amount where you have to pay taxes. It's just understanding.
You need to find the things that you need to let your business pay for that are legitimate write-offs that you don't have to pay all that money in taxes.
Exactly, and but one thing I do want to say, because I think it's so important, because people talk about
You're making my brain sweat.
Yeah, I got you. We don't want to buy things that we don't need just to save on taxes.
Right.
Because that's what we call hustling backwards, right? We're not going to buy things that we don't need just with money that we don't have just to save on taxes. So we want to be strategic about the things that we buy. And one of the most strategic things that you can do is, instead of just spending money on stuff you don't need, if you invest money in tax preferred assets like real estate, you can
tax preferred assets. Okay, go ahead.
Yeah, tax preferred assets like real estate, you can legitimately increase your net worth, earn more money, and pay less taxes at the same time. I'm gonna give you. I know. I'm not.
I ain't doing this for me, because like I do a lot of this stuff. I'm
Yeah.
doing this for them, because I promise you, if my brain's sweating, theirs is hyperventilating. I promise you.
But I understand. And I love it because I get so excited about this, because for me, like, taxes is fun. Like, yo, I'm teaching you like how to keep the money. And like but sometimes when I teach it, people are like, yo, I need a break. Just
Right.
Let me breathe.
Let me catch my breath. Yeah.
Absolutely. But so, for instance, real estate, there's a phenomenon with real estate that's called earn in pocket, lose on paper.
Okay.
So if you buy a real estate property, earn in pocket, lose on paper. So I'll give you a property I own in Chicago, right? It's a $500,000 property, and it makes me $18,000 a year in profit.
Okay.
Profit, that's after all expenses. So $18,000 hits my bank account. Most people think I pay taxes on that. And the answer is, actually, I don't pay any tax on that money, because with real estate, we get a tax deduction called depreciation, which means that we get to write off the depreciating value of our business, even though our depreciating value of our property, even though our property is actually appreciating.
So why do you get to write off the depreciating value if it's appreciating?
Because the IRS says we get to write off the depreciation of the wear and tear on our property. So even though it's going up in value, we still get to write it off as if it's going down in value.
So how do you calculate the value of that depreciation?
Take the purchase price of your property divided by 27.5.
And that's how much you get to write off every year?
Every year. So
when you say the purchase price, you mean the price you paid for it?
Price
or the
you
price
paid,
that it's the value of it now?
The price you paid for it.
Okay.
The price you paid for it minus the land.
Okay.
Okay.
And you divide that by 27.5, and that's how much you get to write off every year.
In depreciation. So if you take $500,000.
I heard you before you drove up. No, I'm gonna do it right now. You gave me the formula.
Yeah.
I know how to use a calculator. So $500,000 divided by 27.5 equals $18,181 per year for 27 years. That's just an automatic deduction on that property.
And how much did I say I was making on the property in profit?
$18,000.
So I make $18,000 in real life in my pocket, but I lose $182 on my tax return, because the depreciation completely wipes out all of my income
from that property.
Absolutely. So if you do it for two properties,
if you do a $5 million apartment building, you get to do the same thing?
Absolutely. Yes.
But that's $181,000
that part
that you get to write off.
Absolutely.
Plus, okay. So I'm doing, okay.
Isn't taxes fun, y'all? like, subscribe, comment below if y'all having a good time with this episode so far.
Whoa, bro. So like literally, okay, 8 times 5 is 4. So $180,000 per year you get to write off on that property. Plus, you get to write off the interest too. Or is that
Oh yeah, the interest on the loan.
on the loan?
Yeah.
2.
Plus all the other costs that go along with operating the property, management fee.
You
And
can write off the property management fees.
yes.
You can write off the repairs
Yes.
in addition to the depreciation.
Yes.
Okay.
And then, mind you, your property is still appreciating in value.
Which means
That you can borrow against the property.
you can go borrow equity out of the property because it's worth more now than it was when you bought it. And the money that you borrow out of it, you can use that to spend and pay 0 tax on that money because you don't have to pay tax on a loan.
It's about how do we keep it. It's and millionaires, like rich people don't pay taxes not because they're evil, it's because they're informed.
I remember everybody was mad at Donald Trump in 2016 when somebody said, well, you didn't pay any taxes last year, or you made $400 million, didn't pay any taxes last year? He said, yeah, because I'm smart, and everybody got mad. I said, I ain't mad, I just want to know how to be that smart.
Yeah, I tell people all the time, don't hate the player, don't hate
Learn
the
the
game.
game.
Learn the game so you can win the game. Right? Because if somebody else can do it, you can do it too. But we all have a choice. We can stay average or we can leave the norm, but we can get informed. And that's what we're all doing today.
Okay, so that's depreciation. Got it. I got depreciation. It's locked and loaded. Now, what is bonus depreciation?
So bonus depreciation allows you to accelerate the depreciation faster than the scheduled amount of time.
Which is 27 years.
For a property. Different assets have different useful lives, right? 5 years, 7 years, 11 years, 27 and a half. What's interesting about real estate is that you can do something called a cost segregation study.
That was going to be my next question.
Oh, okay, man. See, right here, we're in line. We're in
That was
line.
going to be my next question.
So with real estate, so for those of you all that have rental properties and you don't want to wait the 27 and a half years just to depreciate the property, you can do what's called a cost segregation study, which is a long word for separating out the pieces in the property to accelerate the depreciation faster. Because when you buy a property, you don't just buy the building. You buy the cabinets, you buy the flooring, you buy the roofing, you buy the stove, you buy the appliances. All those things have different useful lives. So instead of depreciating everything over this 27 and a half years for the building, we can segregate the pieces in your house and accelerate that depreciation so you get depreciation in the year that you purchase it. Go ahead.
You can accelerate depreciation of how much?
Up to 30 to 40% of the cost of the property is the average that you can depreciate the first year using a cost segregation study. So in our $500,000 example, before we can only write off $18,000.
Now you can write off $250,000.
Now we can write off 30 to 40% of $500,000, which is about $150 to $200,000 in the year that we purchase it. So if you get a property, use an FHA loan to put 3.5% down, that's like $30,000, $500,000 property. You can legitimately get a $150,000 plus write-off for the property the year that you get it, which will offset the other income that you're making at work, which will offset the other income that you're making in your business. W-2 people have used this strategy and wiped out 100% of their W-2 income.
Which means they got all of the money that was taken out in federal income tax as a refund check because they overpaid.
Absolutely.
Wow.
And
So which is better then, the cost segregation, the depreciation or bonus depreciation, or does it depend on what your objective is? Like, how do I know which one of those I should do?
Well, it depends on what your objective is as a business owner, right? So it's different strokes for different folks, but it definitely depends on where you are and what your goals are. Here's the best thing about depreciation and cost segregation studies. The number one question I get, Myron, is, okay, Carter, you're teaching me how to write off all this stuff. I get it, but what happens when I try to get a loan to buy a car? What happens when I try to get a loan to buy a home? If I'm reporting my income at zero, I can't get approved for loans. What most people don't realize, and it's for you all at home, some expenses get added back to your income when you apply for loans. Depreciation is one of them. So when it comes to applying for a loan, banks add back the depreciation that you took.
So you don't have to add it back. They just automatically do
They
that.
automatically add it back because they understand it's not a real expense. It's a phantom deduction. You didn't spend that actual money. So if you had a depreciation deduction that was $100,000 and you go to a bank, they will add that back to your income. So now you're still writing off everything and not paying any taxes. But when it comes to getting loans, you look like you make all this money because they add all those depreciation deductions back.
So all these, whoever wrote this tax code was tripping. They was like, nothing up my sleeve. Watch this. I'm gonna make
So
them think.
you can make the IRS think you're not making no money, but also at the same time show the banks
that you are making
that you are making the money. So you're not having to pay the taxes, and you're still getting approved to buy more assets. That's gonna, guess what, help you save
Is
more
there
money.
anything else other than depreciation that the banks add back? Is there anything else like that?
Depreciation is the biggest one they add
Okay.
back. Depreciation is the biggest one they add back. I think it's amortization, which is like when you're depreciating something that's not tangible. But depreciation is one of the biggest they add back, and it's one of the biggest tax deductions in the first place. So you get the best of both worlds. Like that's why I love teaching this. I can literally show people how to show the banks one thing and the IRS another thing, and it's all legal.
So the more money you make, literally, if you make it in the right arenas, the less tax you pay, the more money you have left over, and the more fundable you are for new projects like apartment buildings and whatever.
If we want to leave the norm, we got to get informed. And people, like when it comes
Spitting it, ain't he? He's spitting.
like, you know, in taxes, I think is one of those things that people think they can go without knowing. Like, it's your number one expense. If I can help you cut your number one expense, how much better is your life going to be?
So is it okay if I disagree with you a little bit?
Okay, yeah.
It's your number two expense.
It's your number two expense.
Yeah. Your number one expense is ignorance about how to make the money in the first place. Because everybody pays. Like people like you and me, we pay to learn. Everybody else pays for not knowing.
To go along with that, the most expensive tax people are paying is not federal tax, it's not state tax, it's not FICA tax.
Come on now.
The most expensive tax that everybody is paying is ignorance tax.
Ignorance
the
tax.
tax of not knowing how to avoid paying taxes. So my question,
now.
you all at home is,
That's your biggest tax.
so that's your biggest tax. How long are you going to continue paying the ignorance tax? You were paying it last year, you paid it the year before that, you paid it the year before that. And you're going to pay it
Right,
next
you ain't
year.
just going to stab him, you're going to twist the knife. he said, oh, now take that, and take that,
but I
and
haven't-
take that.
But I wouldn't
That's
pose
cold,
these.
bro.
I
That's
wouldn't.
cold. That's cold.
But sometimes,
That's a heartless brother over there.
sometimes things have to hurt in order for them to help.
Oh, snappy. Now he's going all philosophical. He went on Socrates on me. Wait a minute. He got all Socratic. He got all Socratic.
Because if people don't know they have a pain, they won't go seek out a resolution. So I'm showing people the pain that they have because I have a resolution for them.
Come on here.
You know, so like the one thing that we talked about, and thanks to you, that I'm now implementing in my business, is a 5-day virtual challenge that I do every quarter to give the people the game that they need to win the game of taxes.
So you like the kind of stuff we're talking about.
Yep.
You talk to people about that for 5 days.
I obviously got
I bet they don't sleep a wank.
No, nobody sleeps. Nobody sleeps because I can't give it all out one day. I'll blow people's heads off. So I have to give them 5 days of intensive experience. Because first we have to break down the limiting beliefs that they thought that some people think not paying taxes is a bad thing.
Right. They think they're doing something noble. Like a certain vice president said many years ago, it's your patriotic duty to pay more in taxes. And I said, somebody needs to teach that joker a history lesson. Because America was founded on a tax revolt.
If you go to a store and a T-shirt says $10, you're not gonna pay $20 for it. So I believe that we all should pay what we legally owe in taxes, but let's not leave a tip.
Come on now.
Every people are leaving $10,000, $20,000, $30,000 tips.
$100,000.
$100,000
tips.
Tips to the IRS, but they don't tip their bartenders.
Well,
You know what I'm saying? They don't tip their. So like my thing is like I create this 5-day virtual experience to show the people step by step how you go from somebody who's overpaying taxes to go from somebody who's overpaying taxes and leaving a tip to somebody who's legally and ethically living tax-free. Not just this year, every year going forward. The strategy that I gave you to help you save $300,000 taxes, you have that strategy for the rest of your
my
life.
natural life, bro. Feel me. The rest of my natural life. And it ain't no joke, bro.
Yes.
I'm like, oh man, I gotta do something. It's so fascinating how the difference between, like, in the spring, W-2ers are just I'm waiting for my refund check, I can guarantee you, and I ain't even a CPA, I can guarantee you get back a $20,000 refund in 2024. All you got to do is overpay your taxes by $20,000. That's a guaranteed tax return. So you're going to loan your money to the IRS, to the government for free.
0% interest.
0% interest for a whole year, so you can get back a check and feel like you did something. If you'd have taken that same $20,000, invested in some real estate or something, you could have done depreciation or cost segregation or bonus depreciation or something.
Something.
And turned that $20,000 into more than $20,000 and still had very little tax to pay or none. Okay. I'm done. I mean, I'm not done, but I'm done for y'all. Because, like, this is a lot of game to get on a free YouTube video.
Well, I mean, you give so much value to the people and to me as a mentee, and I would feel remiss to hold anything back from your audience. So I just think it's important.
Bruh, you spit. Like, he is like, hey, y'all, from my perspective, he ain't faking the funk, right? He literally saved me a minimum of $320,000 in taxes the last month of the last quarter of last year. And only God knows how much it's going to be this year. Because I understand it all year. I'm going to be using it all year. I ain't just going to wait till December to hit it.
Exactly.
All year. All year. Watch and see what I say. All year.
Yeah. And that's why I'm doing this 5-day training, because I want to help the people the same way I helped you. Exactly.
Yeah. And what's really interesting is, like, I used it last year in one area. I can use it in 2 or 3 more areas this year if I find myself with a big pile of cash at the end of the year that I need to, like, write off. Like, not write off the cash, make eligible to write off the taxes on that cash. Bro, you don't have to tell me 16 times. I heard you the first time.
Yeah. No, your reaction to that phone call was like, wait, so you, okay, it's over.
It's a wrap. It's a wrap. I hung up the phone. I had this big old cheesy grin on my face. That's crazy, bro.
Yeah.
Like, I don't think people understand the significance. Like, you literally, when you learn how to move in a different circle of people who understand things that you never thought about. Like, that play you gave me, I never thought about that before. Never thought about it. Have never had a tax attorney, a CPA, an estate planner. I've never had anybody share that play with me. And, like, it literally saved me that much money. So here's what's interesting. Like, I didn't, before you told me what to do, I didn't even know that what I did. I didn't even know that was a thing that was possible, let alone something I should do. Well, guess what? Let me ask you a question. I'm not going to say guess what. I'm going to ask you. Like, you said, like, you've been in our mastermind for how long now?
A little over a year.
A little over a year.
Yeah.
So the year before you came in, not including last year or the year you were, what was your business revenue?
Like 600,000.
600,000. And what was your business revenue last year?
$2.5 million.
$2.5 million. So your revenue's up almost $2 million.
Yeah.
And $1 million of that you did in revenue in one day.
Absolutely.
Did you ever have the thought, like, to have $1 million before you came into our mastermind? The thought of having $1 million day, was that even a thought that entered your head?
No, because you cannot be what you cannot see, right? Like,
if he throws one more rhyme, I'm calling MTV. He's gonna be the tax rapper. Carter Cofield, the tax rapper. That brother's a tax poet.
no, so seriously, once your brain is exposed to something greater, it will drop something lesser. So when I came in your room, I had these goals of I want to make $1 million in a year. And then somebody make $1 million in a day. Wait, you did it? You did it too? Wait, so y'all both did it over there too. So it exposed my mind to things I didn't think were possible, and then it became the norm.
So one new Inner Circle student came in after a different Inner Circle student had done his first challenge. And this guy was feeling bad and apologizing because he only did like $960,000 in a day. He said, but later on we collected more money. And then somebody else chimed in and said, nah, but it ain't $1 million in a day, bro. It ain't $1 million a day. You can't count it. And so I'm like, I hope I didn't scare this dude away. So I called him after it was over. I said, hey, bro, are you okay? I mean, I know that was a little bit of a weird call, right? Because it was like the dude who did like $960,000 two other people in the mastermind was like coming at him strong, like,
hey, bro,
it ain't $1 million in a day. Nah, bro, you should have done it in a day. You did 900,000. You can't get $1 million day award for 960,000 in a day. And so I called this other guy. I said, bro, I know that was a really weird call. And like I could feel, I was, you know how you go to watch a movie with somebody for the first time,
but
you've already seen it, like, and you're feeling what, like, okay, I want to make sure he's okay. Hey, bro, I know it was a little bit of a weird call. You okay, bro? Like, I know it was kind of a weird scenario.
Yeah.
He's like, I gotta tell you, man, I just had to ask myself, where am I? Am I in some kind of alternative universe where people are apologizing for a $300,000 day and a $900,000 day like they did something wrong? Well, yeah, they live in a bubble, bro. You can ignore all that. They live in a bubble. They think $1 million day is the norm because it's like it's common in this room. They think it's a norm, and so I just didn't want to like blow your doors off in your first office hours.
Absolutely. But that's what happens when you're just around high level people.
Right.
And that's what happens when you're in high level rooms. You get high level information. You also get a high level mindset that you can pair with the information to become the best version of yourself.
Wow, man, what you laid down today, that was some tracks, bro.
And that was a free game.
Oh, but wait, there's more?
I was say, like,
but there's more?
That's the free game. So like, when I tell people,
you do a challenge once a quarter.
Once a quarter.
People can pay you to come learn the game.
Pay me to come learn the game.
And then there's more.
And then there's more. Yeah, like say.
Oh, that's right. You said there was 400.
Yeah.
You said there was over 400.
Only thing you take from me is notes. Okay. You can't take nothing else from me. So like, this is the free information just to get people's minds understanding to what's possible. But within the 5-day virtual training, I'm giving them the step-by-step walkthrough of how they can implement it in their business. So not only I give them game, but they get to ask me their personal tax questions as well, so I can give them the answer that their CPA is not giving them. Because most people,
the CPA don't know. You cannot teach what you do not know, and you cannot leave where you will not go.
That part.
Okay, so tell them where they need to go to like pay you some money so they can pay the government less money.
There you go. So anybody that's interested and want to learn how to live tax-free in 2023 is go to taxfreechallenge.com.
Taxfreechallenge.com.
Tax-free.
That's a real website.
That's a owned domain, owned early, okay? Go to taxfreechallenge.com, secure your VIP seat. You're going to be spending 5 days with me to learn how to live tax-free. You get an hour of training, then you get an hour of Q&A so that I can teach you all the strategies so that you can not only earn the money, but that you can keep the money as well. So now that you don't have to be like, worried about how this millionaire don't pay taxes, this millionaire don't pay taxes, instead of hating the player, instead of hating the game, I'm giving you an opportunity to learn the game so that all of us together can win the game.
I just had you know how when people are teaching stuff, like my brain starts like cross-referencing things, right?
Yeah.
Like all the databases were talking to each other. So here's what I just thought of. So when I buy a 20 or 40 unit apartment building, let's say I buy a $5 million 30 unit apartment building here in Tampa, I got to put 30% down. So that's $1.5 million. But the rents haven't been raised in 3 years. And there's some upgrades I can do for another $500,000. So now I got $2 million in. I can upgrade that property, and now it's worth $7.5 million. I can go to the bank and borrow 80% of that equity, which is $2.5 million times 8, which is $2 million.
Which is exactly how much you put in.
Which is exactly how much I put in. I don't have to pay tax on the money that I made to put in because it's an expense. It's a business expense. I get to borrow the equity out. I don't have to pay tax on that, so I still have the $2 million that I put in. I'm just like, I'm going to make sure I'm not wrong.
Yeah.
So I still have the $2 million I put in. I have that to use as tax-free income. But it's not just tax-free income. It was tax-free and tax-deductible.
So you don't get a deduction for the money that you put down.
Okay, I don't.
But when you depreciate the property to do a cost segregation, you're going to still get that same amount. Because you got to think, if you pay $5 million for the property and you do a cost seg, you can get 30 to 40% of the deduction the year that you purchase it, which is roughly which is roughly over $2 million. So you can still get the write-off. It's just not, you don't get the write-off
But the second year I don't get to depreciate it.
The second year you do. We only took 30 to 40%. We still got 60% left to go.
So how many years do I get to depreciate it if I
The
do a
other
cost?
26 and a half. Yes.
So I get
You get the chunk up front, but then you still get the dribble for the rest of the
for 26 and a half years.
Yep.
Shut up.
Yep.
And then I can take that $2 million that I borrowed and go buy me another $30 million apartment building, do the same thing right over again. And then I start cash flowing this money, and you let the tenants pay off the loan that I borrowed. I'm just making sure I understand this. I get a deduction on the interest rate of the loan, and then what's left over after the cost of running the apartment from the rents that come in, that becomes taxable income until I use it to buy until I spend it on tax deductible business expenses.
It's a way that you're literally.
I want to make sure I understood that right.
Like, the more you invest, the less you pay the IRS, and that's the last bar I'm gonna give you. Okay, the more you invest, the less you pay the IRS.
Tax wrapper, the tax wrapper.
Like, the IRS is literally rewarding us for investing our money the right way, because every dollar that we invest in housing, that's $1 they don't got to invest in housing, right? Every job that we create is one less job the government has to create. So when we're investing in ourselves and we're investing in assets, they're like, okay, cool, go. You're stimulating the economy for us, so we don't have to do it. Thank you.
Cray, like Bebe, Ray, and them.
All that.
Bruh, that was bad to the bone. What last thing do you want to share with our audience before we end the interview?
Just join me on this challenge, taxfreechallenge.com. I think it would be a great experience for everybody to get in the room with me and be able to learn. And just understand the best investment you can make is an investment in yourself, whether it's with me, whether it's with Myron. There's no better investment than investment in you. And we've been taught, shout out to Alex Hormozi for this quote, we've all been taught to invest in the S&P 500, but why don't we take some money and invest in the SME 500?
Come on now.
Right? So I think that we all deserve to invest in ourselves, to understand that we're worth the investment.
Come on,
so that we can learn and grow and become the person that God wants us to be.
So good, y'all. So you got the URL, taxfreechallenge.com. This interview was phenomenal. Let's go. Appreciate you, bro.
Thank you, brother.
All right, man.